Welcome to our latest market update. Today, we're tackling a massive shift in the investment world. If you've been feeling like the old rules just don't apply anymore, well, you're absolutely right. It's like the entire playbook has been thrown out, and we're here to walk you through the new one. So here's what we're going to cover. First, we'll dig into why the market feels so upside down right now. Then, we'll introduce a completely new way of thinking about what companies are worth in this digital age. And finally, we'll get practical and talk strategy for U.S. stocks, the crypto markets, and even precious metals. All right, let's get right into it. To really get what's happening, you have to understand this central conflict that's playing out across the markets. It's a total reversal of everything we've been taught to expect. I mean, if you've been watching the markets lately and just scratching your head thinking none of it makes any sense, you are not the only one. So many of the historical patterns, the old trusted signals that investors have leaned on for decades, they're just not working. In this quote right here, it just nails the paradox we're seeing. You have this so-called smart money, right? The big institutional funds, they're selling, and yet the market keeps climbing. So what gives? It's the individual retail investors, the folks who actually use this new technology every single day, who are buying. And this really just breaks it all down, doesn't it? On one side, you've got the institutional players. They seem stuck in the past, relying on these old valuation models that just can't keep up. And on the other side, you have everyday people who get the real-world impact of today's tech because, well, they live it.
Okay, so if the old playbooks are useless, how in the world are we supposed to figure out what the big dominant companies are actually worth? This means we need a whole new framework.
Seriously. Think about it for a second. Companies like Amazon, Microsoft, or Apple, are they just businesses? Or are they something more now? They've basically become public utilities. They're woven into the very fabric of how we work, how we shop, how we connect with each other. You can't just slap a simple PE ratio on that, can you? And that brings us to this crucial idea: life integrated value. The real worth of these companies isn't just hidden in a balance sheet somewhere. It's in how indispensable they are to us, day in and day out. This isn't just hype. It's recognizing that companies that are this deeply embedded in our lives have a kind of value that the old school analysis just completely misses.
Okay, so let's make this real. How does this new way of thinking actually apply to the U.S. stock market? To indices like the S&P 500, the Nasdaq, and the Dow Jones.
Well, when you start factoring in this life integrated value, some long-term models suggest that the S&P 500 could have some serious room to run. We're talking about potential targets up in the neighborhood of 7,300. Now look, this isn't a prediction set in stone, okay? It's not a guarantee. It's just to show you the potential scale of this shift in thinking. So what's the move? It's simple, but man, it takes a shift in your mindset. The big takeaway here is this: stop fearing the dips. The short-term drops, the scary headlines, they're going to happen. Instead of seeing them as risk, see them as your chance to buy into these incredibly strong, life-integrated companies at a discount. All right, let's switch gears and jump into the wild, fast-moving world of cryptocurrencies. Because this space is so volatile, the playbook has to be a little different. It's much more tactical, all about managing that risk. Now, for assets like Bitcoin, Ethereum, or Ripple, we need a clear signal. This chart lays out a pretty common tactical approach. It uses something called a moving average, which is just the average price over a certain time, in this case, a 4-hour window. The simple rule is you only consider buying when the price is above that average. Why? Because it suggests momentum is on your side. It's a disciplined way to help avoid trying to catch a falling knife. And finally, let's talk about the traditional safe havens, precious metals. Here, the playbook flips again. It's all about patience and discipline, especially when we're looking at gold. With gold, the analysis suggests the name of the game is patience. You're not chasing the price up. You're waiting for those moments of fear, when the price pulls back to what we call strong support levels. Basically, price points where it has historically found a floor. When it hits one of those spots, that's your signal to maybe build a position, piece by piece, and just ignore all the short-term chatter. Silver, on the other hand, that's a completely different story right now. The outlook here is actually much more bullish in the near term. The technicals suggest that momentum is pointing up and that current prices could be a pretty solid entry point for anyone looking to get in. So, as we wrap all this up, it really boils down to this one fundamental question for every single one of us. The disconnect is real. The choice is, are you going to keep investing based on the rules for a world that doesn't exist anymore? Or are you going to adapt and use the new playbook for the world we actually live in today? Thanks for joining our channel. If you found this breakdown helpful, a subscription and a like would be really appreciated. It helps us keep bringing you more insights to make sense of these complex markets.